Here to talk about the Metro Phoenix real estate market, I'm
And
Stephanie,
I'm Bryce.
and we are the Lugos Realtors with my home group here in the Phoenix Scottsdale area, but serving the Valley-wide. And there are some numbers that you need to be aware of as we head into April. The market is definitely hitting peak seasonal craziness, I think, and we've got some numbers to talk about what that actually means. So let's get to it.
Awesome.
So, from all the data that we're monitoring, we are definitely seeing the beginning of a cooling trend in Phoenix and just the metro valley wide. The problem is it's happening at such a glacial pace that is going to take a really long time for it to really create any significant ripples throughout the market. But we can look at some numbers that we're seeing today and some factors that are really affecting the way that people are buying and selling going into the spring season, which is our peak season in Arizona. So let's talk about that. The first one that I had for us, Bryce, was interest rates. What are you seeing with that?
Well, they're nearly 5%, just under that right now, which just not even like 6 months ago, they were low threes or even sub threes for some people. So we're seeing interest rates continue to rise.
So in the last 5 weeks, they've gone up about a point, which feels very staggering, along with all of the other things that are rising just from inflation, right? Where this is happening at the same time that there's like, quote unquote, pain at the pump, grocery costs are going up. And so the big question is how much how much are they going to affect purchasing power going into the spring? And it's my theory, maybe not theory, but it's my thought that I don't think it's going to have the direct impact on demand that others might say it is.
Well, for some it won't, but I mean, there are people that are already looking at their max, and when they are looking at what is their max purchase price, as these interest rates rise, it's going to be changing what their purchasing power is. And while pricing isn't actually dropping right now, I think that we have, and maybe you'll talk about this, but 4.5% increase in prices just in the last month or so. As that's happening, you know, it's going to hurt the people that are already, again, searching at their max purchase price. So if you're looking at 500,000 a day, or say even 6 weeks ago in that period where interest rates were lower, and if that was your max, while those interest rates were in the low threes, mid threes, you're now likely not going to be purchasing at 500,000 because you can't afford that monthly payment anymore.
Yeah.
That 1 point is going to make a big difference in your payment. But I mean, for those who are just kind of looking at purchasing within a payment, or a comfort zone, and that maybe they're not trying to like max their purchasing power out, those are the ones that are not going to be as affected, and they still need to just be looking to buy.
Yeah, I think that if anything, it's just going to cause a little bit of a correction in expectation from sellers, right? So maybe they're not going to be getting the 20 offers that are driving the list price way up sky high. Maybe it's something more along the lines of you should be listing at what you want, and then hopefully the offers support that, and then hopefully that transaction can close at that.
I think for sure. I think that you're going to see buyers, rather than all of them just launching offers, maybe just being a little bit more realistic with their thoughts of, is this the right home for me? And maybe we see it as a short-term effect where people slow down for a second and they're like, okay, my interest rate is higher. Let's be really serious about
Just
this.
recalculate a little bit.
Right. And then the sellers aren't getting all those offers. So maybe you have a little bit more days on market on some stuff. I mean, we went through this last week. I think we're going to talk about it later on, but we're in another video coming up. But I think that for sure you're going to have some buyers, like you said, recalibrate with their search and not be as quick to submit an offer.
Yeah, I think so. And there's a couple of people that we want to be considering when we're talking about these numbers, right? Because there's a large group of buyers in the market who are not affected by interest rates, and that's going to be cash buyers and investors who are purchasing large amounts of property in order to buy and hold, right? Some of them are flipping, but a lot of them are acquiring properties to rent. I think that they are not obviously going to be deterred or as deterred by the rising interest rates, but what they will be affected by is if those crazy increases in home values do start to slow, which is kind of what everybody's hoping happens. I don't think most people think that we can just gallop away with home values year after year and expect that to be a healthy thing for anybody. And so I just wonder if on one side, yes, demand should stay. Demand should not be impacted so directly by interest rates for the 25 to 30% of investors who are purchasing right now in the market. But at the same time, are they going to be as bullish in purchasing properties if they're not expecting the same rises in home values over time?
Yeah, I mean, if rent continues to rise though, and if that's what a lot of their purchases
Yeah.
are, then it like you said, it may not affect them very much. What you might see, just on a side note, is some sellers who aren't getting that quick, fast, high offer from buyers, they might even turn to some of those investors
Mm.
as a way to get them out of their home because
Mhm.
they're buying right now or they need to buy, so they're looking for that quick sale. So
Yeah.
you could see a change there too, where they wouldn't normally be doing that because they'd have so many traditional buyers at their doorstep. But while there still are a lot of buyers out there, we're not discounting that. But if they aren't selling as quickly, you could see some sort of slowdown, especially on like the outskirts of town. Maybe that turns up.
So that's kind of leading us into the question of home values. And one number that we saw in the last couple of weeks was that values rose 4.5% month over month from February to March.
Right.
That's crazy.
And interest rates were rising during that time.
Yeah.
I do think, again, we've talked about a lot of these numbers can be lagging numbers. So a lot of that could have been locked in at a lower interest rate. So
Yep.
It'll be really interesting to see what we see from March to, from mid-March to mid-April, which is the time frame that we're checking there, because that'll have the slightly higher interest rates that people are locking in. So it'll be interesting to see if that pricing continues to rise. I feel like I'm seeing prices rise still. You're seeing a lot of people who are listing homes and coming soon then raise their prices while they're in coming soon because they're gauging interest on homes.
Mm-hmm.
So you do see people still increasing home values that way, but it will be interesting to see what things are closing at from mid-March to mid-April next time we check these numbers.
Yeah, I think that a good indicator of this is, there's so much data that you can look at, and all of these different data points are going to kind of just show you a little bit of like how spicy things are in the market. And one that we look at from time to time, which is one that a lot of buyers care about, is the percentage of the list price to sale price, meaning did these homes ultimately sell for higher than they listed at? Is that a result of, a bidding war driving the price up? That's kind of what we tend to see. And in April, as of April 1st, we did see the vast majority of major cities in the metro selling for an average of over list price, at least by 1%, many over 3%. So really, if we want to look at one example, a big standout is Chandler, right? And Chandler is consistently voted one of the most desirable places to live in the US. That's always a really desirable place for buyers. But if we look there, that was selling at a percentage price of 103.32%, meaning it sold generally that month for 3% or more over list price. Right. Now, if we want to do the quick math, and maybe you can help me with these numbers, the median monthly sales price in Chandler right now is at $585. Yeah. So 3% of that.
Yeah, it's just under $18,000.
That buyers would be paying over list price.
Right. It's a lot of places though. It's not just Chandler.
Yep.
I think that the only two places out of all of these cities that weren't on that list of above 100%, way out in Gold Canyon, which is very, very far, and kind of in some parts of Gold Canyon, like a luxury area, but just far. And then Paradise Valley, which obviously is a very, very luxury community with super high values. And they went up very fast and quite high in the last 2 years. So
yeah, they've already seen annual appreciation of over 30%. I think 37%, depending in some areas and some price points. And so they're already being super aggressive in pricing.
Right.
We wouldn't expect them to see any, crazy numbers like that.
But all the popular places to be, or whatnot, like Chandler's, Gilbert's, all of them, about 102, 103% over.
So maybe that's something we look at, and maybe a month from now, we'll have the benefit of another 6 weeks of seeing how did those numbers react to interest rates. And from that, we can really get a sense of whether or not this cooling trend is going to be impacting most people on the ground who are just looking for a great home.
Sure. And just real quick, just a disclaimer on that last bit of percentage of price as far as what they're talking about. They do refer to it as a percentage of the final list price rather than the original list price, because a lot of people do tend, not a lot, but you'll see agents tend to raise that list price kind of to match or get closer in line with where offers are coming in so that they do bring in higher offers to that point. So that can skew it a little bit. And the Cromford report does mention that in here. So just something to take
Yeah.
note.
Yep. And again, all of these are not to like fit any crazy agenda or to become alarmist in our findings. I think it's so important to look at those numbers
Yeah.
and take everything with a grain of salt, and the devil is going to be in the details, right? So like how can we really make sure that we're looking at these in a way to where we can help our clients make really smart decisions for their home.
Sure.
So let's just close it out with this. What are we expecting as we head into the hotter months?
I mean, I would through April, May, I still would continue to think that we're going to be rising even further with prices. Interest rates, too, maybe a little bit. It'll be interesting to see how high they go. Obviously, with the summer, things already slow down here. But as rates do continue to rise, I would think come the hot summer, hopefully that's a little bit of a cool down for buyers and lets them figure some things out and get something under contract.
Yeah, generally what we see here in the Phoenix area is pretty intense selling all the way into June,
Hmm.
at which point most people tend to skedaddle out of town. They're doing their vacations, and we did not see a lot of that over the last 2 years because of the pandemic conditions.
Yeah, there's so many travel restrictions. So
Totally. And I'm really interested to see how this summer reacts to that. I think that we will see a more typical seasonal shift that we normally do. Things tend to kind of just become a little less crazy after the second half of the year,
yeah,
right? So like we get into July, from July through the holidays, things tend to be not quite as crazy as they are in the spring. And we haven't really seen that. There hasn't really been a break because those factors just weren't really there the last 2 years. I'm wondering if by Q3 we start to see a more typical seasonal shift, and hopefully that brings some relief to buyers.
yeah,
I guess the question is where price is ultimately at that point.
right. I can see that happening.
So I hope that this helped give you some perspective in terms of what we're seeing on the ground and what you need to know. There's a lot of numbers here, and if you would like a little more clarity, go ahead and shoot us a message in the comments. Or if you're wondering how these impact your chances to buy or sell this year, go ahead and book a call with us. All of those details are in the caption below. The way that works is you book a time that works for you. We hop on a quick phone call, learn more about your story, and see how we can point you in the right direction.
Thanks for tuning in. We'll see you next time.